Welcome back. It's time now to take a look at the top business stories. DP World sells 75% of Australian operations. Islamic Banking Award winners are revealed. And we find out about ethics and technology within the Forex market. The GCC markets closed mixed today, and the UAE bourses also ended mixed. The DFM fell 0.25% to close at 1,623 points. The property sector saw a loss today, with Arab Tech falling 1% and MR Properties down 1.5%. DU rose 1%, while Dubai Islamic Bank rose nearly 1%. Air Arabia posted further gains after yesterday's top performer position by nearly 0.75%. 63 million shares were traded, valued at 108 million dirhams. Meanwhile, in the capital, the ADX gained 0.08% to close at 2,700 points. There was minimal movement within the property sector, as Aldar Properties fell 0.01%, while Suhur Real Estate climbed 0.01%, while there was no movement within the energy sector, as both TAQA and Dana Gas shares remained unchanged. 32 million shares were traded, valued at 64 million dirhams. DP World has sold 75% of its Australian operations to private equity firm City Infrastructure for a reported $1.5 billion to reduce its net debt. The port's operator has stated that it will keep 25% and will continue to manage operations and has no plans to sell other assets. CEO Mohammed Sharaf has said it is part of their strategy of continued growth in emerging markets without increasing overall leverage in their business. The firm had considered an initial public offering but had opted for a strategic investor as the valuations were better. Chief banking representatives from around the world gathered at the 5th Annual Islamic Business and Finance Awards in Dubai overnight to reward the very best in Islamic banking performance. CPI Financial handed out some of the most respected banking awards, from lifetime achievement to the most sought-after Best Islamic Bank.
Okay, fine. Smile, ready? Okay, ready?
We had 30 categories in total, 3 individual categories, 27 corporate categories. For the corporate categories, we had an international panel of judges provide us with shortlists which the readership of the global magazine Islamic Business and Finance voted on. The 3 individual categories were write-in categories. We asked people to nominate those individuals they felt most deserving of the awards. And I'm very pleased to tell you that of those 3 awards, I'm impressed with all 3 of our winners. The Lifetime Achievement Award went to Governor Zeti, the Governor of the Central Bank of Malaysia. The Outstanding Contribution to the Industry Award went to Professor Rifat Karim, who is the Secretary General of the Islamic Financial Services Board. And the Islamic Banker of the Year was Tirad Mahmoud, who is the Chief Executive of Abu Dhabi Islamic Bank. Among the corporate categories, the most important award was the Islamic Bank of the Year award. And it's perhaps no surprise that that was won by Abu Dhabi Islamic Bank, the bank that Tirad Mahmoud is Chief Executive Officer of.
Now, the euro has strengthened after a senior Chinese official reportedly expressed support for measures by the European Union to tackle the Eurozone debt crisis. Well, to discuss this, as well as Saudi's 2011 budget, we're now joined by Philippe Daber-Pantanons, senior economist for the Middle East and North Africa at Standard Chartered Bank. Welcome to the show, Philippe. So let's start off with the euro. Now, China has expressed interest into stabilizing the Eurozone. Tell us what's going on there.
We just learned that China will bring more support to Europe and, generally speaking, to the European financial stabilization. What it means basically is that even if they didn't give any detail, simply China will buy more European bonds, and obviously the bonds of the weakened countries from the periphery. This is not new. China has bought a lot of the Greek bonds, a lot of the Portuguese bonds already, and actually more than bond purchases, they actually increased some of their FDIs, foreign direct investments, in Greece in particular. China has a vested interest in seeing Europe stabilizing and not falling deeper into a crisis. Indeed, Europe is the first export market for Chinese goods. So we do see an increase of the power of China in terms of economic clout, but not only economy. They do play a big role in terms of diplomacy now.
Really some good news for the euro there. Now, Saudi Arabia has released its budget this week, marking the largest allocation in history. What's your take on that?
Saudi Arabia just announced its budget for 2011. It forecast a deficit of around $11 billion. Last year, that deficit was forecast to be around $19 billion, but it turned out to be a surplus of $30 billion. And this is because oil prices are generally budgeted to be very conservative. So this year, we estimate that roughly the oil prices that was taken into account is $59, when we are more in a 85 to 90 range in the current days. And this is our forecast for next year. Infrastructure and education are the two main objects of expenses next year for Saudi Arabia, and this will help the country continue its drive toward diversification.
Thank you very much for that, Philippe. On the way after the break, we talk to Oanda's Managing Director, Paul Hayward, about ethics within the Forex market.